What's up, guys? How's it going? Welcome to the BJJ Lender, the podcast where we roll through financial strategies, physical wellness, and mental fortitude, just like we do on the mats. I'm your host, Shamir. You could just call me Sham, your boy. And today's episode is all about cash flow, specifically merchant cash advances, or MCAs. Now, if you're a business owner or entrepreneur, you know that just like in Brazilian jiu-jitsu, success is all about adapting quickly, making smart moves, and knowing when to seize the opportunity. And that's exactly what MCAs can offer. Fast capital to help you grow and scale your business, especially when time is of the essence. But before we get into the benefits, let's start by breaking down what an MCA actually is. All right, guys, let's start with the basics. An MCA isn't a traditional loan. Instead of getting a lump sum and paying back a fixed amount over time, an MCA or a working capital loan gives you an upfront amount of capital based on your future credit card sales or receivables. In return, you repay a percentage of your daily or weekly sales until the advance is paid off. The beauty of this is its flexibility. If your sales are slower one week, your repayment is smaller. If you have a booming week, you pay a little more. Think of it like this. In jiu-jitsu, when you're rolling with someone, you're constantly adapting, right? Sometimes you need to go full force, balls to the wall, right? Sometimes you need to pull it back a little bit and conserve energy. Same thing goes for MCAs. They adjust to the rhythm of your business, making them ideal for companies with fluctuating cash flow. All right, fam. Now, let's talk about why MCAs are a powerful tool for growth. As any entrepreneur knows, capital is the lifeblood of the business, all right? Whether it's investing in new equipment, stocking up on inventory, or launching a new marketing campaign, you need access to funds to move forward. With traditional loans, the approval process can be slow. Banks want to see collateral, business history, strong credit. But in this fast-paced world of business, right, waiting weeks or even months for a loan can mean missed opportunities, y'all. This is where the MCA shines, all right? They provide speed and agility. In many cases, you can get funded in just a few days. I usually take 24 to 72 hours. The quick infusion and injection of cash allows you to pounce on opportunities, all right? Whether it's expanding operations, hiring more staff, launching a product line ahead of your competition. Just like in jiu-jitsu, when an opening presents itself, you got to move fast or risk losing out. Take this example, retail growth. Take a retail business, for example. You're gearing up for the holiday season. Perfect time. And you need more inventory to meet demands. Waiting for a bank loan might mean missing out on the holiday rush, but with an MCA, you can quickly get the funds to stock your shelves and capitalize on peak season. Or consider being a restaurant owner and you're looking to expand your kitchen or open a second location. You got steady cash flow from daily credit card sales, but you need capital now to jump on a prime real estate opportunity. An MCA could be the difference between opening that second location this year or watching another competitor take that spot. MCAs are particularly useful for businesses with high credit card sales, restaurants, retail, e-commerce, wherever the revenue might ebb and flow, but the need for working capital remains constant. Let's dive into which industries benefit the most from MCAs. Any business that relies on regular credit card transactions or electronic payments can take advantage of them. Here are a few industries where MCAs can be game changers. All right, let's start off with restaurants and cafes. Daily sales can fluctuate based on seasonality or local events, making a flexible repayment structure ideal. Retail stores. MCAs are perfect for stocking up on inventory for peak shopping seasons or launching new product lines. Let's talk about spring break or the holidays. E-commerce businesses with online sales constantly shifting, MCAs provide the ability to scale quickly, invest in marketing, or handle sudden surges in demand. Medical practices, whether it's purchasing new equipment or expanding office space, medical professionals often need fast capital to grow their practices. And my favorite, beauty and wellness spas. For industries dependent on appointments and walk-ins, MCAs allow for renovations or marketing campaigns without the burden of high fixed repayments. The key benefit across all these industries: flexibility. Unlike a traditional loan with set monthly payments, an MCA's repayment structure adjusts as your sales do. You'll only pay back more when you're earning more, so there's no strain on cash flow during slower months. But like any BJJ match, there are things you need to watch out for. While MCAs can be an amazing tool for rapid growth, they aren't for everyone. Here are a couple of things to consider before diving in. Cost of capital. MCAs tend to have higher costs compared to traditional loans. The factor rates, or how much you traditionally pay back on top of the advance, add up quickly. So you'll need to weigh whether or not the potential growth from the advance outweighs the cost of borrowing. MCAs are a short-term solution, all right? If you're looking for long-term financing, you might be better off with the traditional bank loan, all right? You might have to wait a couple more days or weeks to get that money, but you'll get that money at the end of the day. Because repayment is based on sales, you have to be confident that your business will continue generating steady revenue. If sales take a sudden dip, you might struggle with repayments, though they do adjust with their revenue. Just like in BJJ, where every technique has its pros and its cons. Depending on the situation, MCAs are a powerful financial tool, but one that needs to be used strategically. Can't stress that enough. Don't let the fast cash tempt you if it doesn't fit your long-term goals. Is a merchant cash advance or working capital loan the right move for your business? Well, just like in jiu-jitsu, it depends on your situation and your goals. If you're in need of quick, flexible capital or take advantage of growth opportunities or to manage a temporary cash flow crunch, an MCA can give you the leverage you need to make those power moves. If you got consistent credit card sales but want to avoid the hassle of traditional loans, it's a great option for accessing fast cash without a lot of red tape. But remember, y'all, just like any jiu-jitsu match, you've got to have a game plan, understand the costs, know your numbers, and make sure an MCA fits into your broader financial strategy, y'all. All right, y'all, that's a wrap on today's episode. I hope this gave you some insight into how MCAs can be a powerful tool to help grow and scale your business. Just like on the mats, success in business requires agility, quick thinking, and the right moves at the right time. MCAs can be that move as long as you're prepared for the risks that come with it. If you've got questions about whether an MCA is right for your business, reach out to your boy Sham. I'd love to chat and help you navigate the best financial strategy for where you are in your business journey. All right, just book a consultation with your boy. Until next time, keep rolling, stay financially strong, and never stop pursuing goals. I love to chat and help you navigate the best financial strategy for where you're at in your business journey. Until next time, keep rolling, stay financially strong, and never stop pursuing your goals. It's your boy Sham, and I'm the Jiu-Jitsu Lender, aka the BJJ Lender, signing off. Peace.